Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. Bookmap is encouraging everyone to join Bookmap Discord. If you do so, you will need a Bookmap subscription. Note if you are already have not subscribed to Bookmap, you want to participate in Discord, you can sign up for a free subscription for Bookmap, and you will need to verify your account, whether it's a free or paid subscription, to gain full access to Bookmap Discord, to watch the streams and participate in chat. So again, Bookmap is encouraging everyone to join Discord. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, certainly in the large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the SP 500 or the Nasdaq 100. And for the SP 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the Nasdaq 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading. The first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis. And for setups, and when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset and the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Stephen. Welcome. Glad you're here. All right, here's my agenda for today, Wednesday, September 18th. First of all, I want to go over news items, economic data and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then, time permitting, I will review some setups from earlier today. And I'm sure everyone knows the FOMC announcement is at 2 p.m. today. I will stop whatever I'm doing at that point in time and watch the live market. And I will be watching the announcement on another screen, another computer. All right, so that is That's the agenda for today. So let's go over news items again. Today, VIX expiration this morning. That was at 9:30 a.m. Eastern Time. And then, of course, again, FOMC announcement at 2 p.m. today. And the press conference begins at 2:30 as I will be wrapping up my webinar. All right, tomorrow, jobless claims come out at 8:30 a.m. Eastern Time. And then Friday is the big monthly options expiration. Looks like a heavily call-dominated options expiration. More about that on Friday. All right, let's move on to positional analysis. I'm going to start with the SP 500. This is the ES Futures and Bookmap. Before I take a closer look at this chart, I want to take a look at a higher time frame. I'm going to go to the SPX, the underlying index. This is a one-day chart in Thinkorswim for SPX, showing 1 year's worth of data. I want to start by taking a look at this chart. Here's July 17th. That was VIX expiration, just like today, 3 days before the monthly options expiration. That's when the correction began. That ended on August 5th with a low of around 51.19. And as you recall, that weekend, that was the yen carry trade unwind over the weekend. Hello, RJ. Welcome. Glad you're here as well. All right, let's pick that up with a 1 hour chart now. Go to a 1 hour chart so that low 51.19 led to a consolidation between right around 55.60 and 56.50. Last week, SPX did break down below that level, found support just above the 5,400 put wall at the time, and that was actually the SPY 540 put wall that provided support. That was just above the SPX 5,400 put wall at that time, and then SPX has rallied back up toward the upper end of the previous consolidation. All right, let's take a look at levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. Those levels remain in place for the entire week. The dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from yesterday. Note the expected range for the day today, according to the options market, was plus or minus 59 points. So SPX trading right in the middle of both of those ranges so far today. The dark red lines on this chart are showing Spotgamma levels. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers. They're available on a variety of trading platforms. Again, this is Thinkorswim, a 30-day, 1 hour chart. I'm going to point out the key daily levels. First of all, the put wall is at 5,500. That's the strike with the largest net negative gamma that can be expected to act as support. The next level up is the volatility trigger. Let me zoom in on this, just make this a little bit easier to look at. Put wall 5,500, support level. Above that, next level up, is the volatility trigger VT at 55.90. That's Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to edge to their delta exposure. That tends to enhance or increase volatility. Above that level, like SPX is trading down, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to edge their delta exposure. That tends to subdue or decrease volatility. And note that applies to most normal days. Today most likely will not be a normal day. All right, so SPX above its volatility trigger, positive gamma. Just above that is the absolute gamma strike at 5,600. That's where most of the gamma-weighted open interest is concentrated. And above that, the call wall remains at 5,750. That's a strike with the largest net positive gamma that can be expected to act as resistance. So potential floor at 5,500, put wall, and potential ceiling at the call wall at 5,750. Note there were no shifts in levels for SPX from yesterday. For SPY, the absolute gamma strike did shift lower to 550. So that was the only shift in levels for the SP 500. All right, let's wrap up our view of SPX with a 1-minute chart. This is showing the rally that began last Wednesday. Current consolidation beginning Friday, Monday, really continuing on now. It looks like SPX tried to break out above the 5650 level, was not successful yesterday. All right, let's zoom in on this last couple of days. Tuesday and Wednesday. SPX is above its volatility trigger. Earlier today, it found support right around 5620, and that was a support level yesterday. All right, so up above the 5650 level and the 5651, which is a combo level. And note that 5650 was noted as resistance in the Spotgamma AM Founders Note. And the 5620 level, as we can see on the Bookmap chart, was noted as support and did its job just like yesterday, acting as support. All right, so this is Bookmap again, ES Futures and Bookmap. I look at the SP 500 in terms of SPX and SPY levels. So I have those on my Bookmap charts in my own cloud notes. So I can show SPX levels. There's that 5650 level that I was just talking about, the combo level just above that, and the 5620 level acting as support. I'll talk more about this breakdown right around 10:45 in just a minute and what led to that. Breakdown below this combo level for SPY and also VWAP. Is there was a coordinated move lower in puts and calls for the S&P 500. All right, note this morning, this is before the cash open. Thought this is interesting. S&P 500 pinging between the SPY 564 level and the 563 level. That level acting as resistance at the cash open. All right, so those are levels in play for the S&P 500. Again, I will talk about the setup in the morning in just a minute. I do want to get to Nasdaq. Let's take a look at NQ futures and Bookmap. Oh, just one quick thing in the ES futures here. I am using the December contract, the Z contract. Note there's quite a difference in price between ES and SPX. Right now it's about 64 points. So I'm showing SPX 5620 at ES 5684. All right, moving on to NASDAQ now. Key levels in play acting as resistance earlier today. Let's take a quick look at the underlying index charts. I'm going to go to QQQ. QQQ. This is a 1-minute chart, regular trading hours on the dark shaded portion. Looks like QQQ is finding resistance right around or just above this 474.3 level. That is a combo 4 level. And this is a key level to watch for QQQ, the volatility trigger at 473. Earlier today, QQQ did trade below its volatility trigger, now back up above. So kind of a risk on, risk off level for QQQ. And let's take a look at NDX. Zoom in just a bit. All right, so key levels in play for today. The call wall, absolute gamma strike at 19,450, and there's a combo 1 level just above that. And price is oscillating, except for this 1045 dip, up and down around that level. And again, 19,450, that is the absolute gamma strike and the call wall. All right, shifts in levels for Nasdaq, just minor. The volatility trigger shifted 1 point higher for QQQ. All right, so levels in play. There's the, was pre-market. The primarily the NDX 19,500 level, and then the 495 level, just below that combo 4 level, acting as resistance before the cash open and at the cash open. Here's that combo level in QQQ. And just below that, the 19,450 NDX absolute gamma strike and call wall. And there was no clear support at this reversal higher right around noon. The drop from 10:45 to 12 to noon. All right, more about setups in just a minute. Let's wrap up our view positional analysis by taking a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day. This is for the S&P 500 and the Nasdaq. Note all these numbers are positive, less positive than yesterday. In a positive gamma environment, for an index, spot gamma assumes that traders are short calls, market makers are long calls, hence the positive gamma, and they have to trade against price to hedge their delta exposure. All right, one more thing that we can take a look at before getting to taking a look at some setups before the FOMC. This is the Fed Watch tool. Let me refresh this. Well, that might have been a mistake. This website is probably being overwhelmed. So what it was showing earlier, current target rate 500 to 525. That's in basis points. And there's a 61% chance of a 50 basis point cut and a 39% chance of a 25 basis point cut. This is the first time in quite some time there has been some uncertainty. All right, so it has changed a little bit. Right now, 57% for a 50 basis point cut and 43% chance for a 25 basis point cut. So again, this is first FOMC announcement in quite some time where there has been some uncertainty about the announcement, what the Fed is going to do. In previous meetings the last few months, there's been a high degree of certainty, so the key really was to wait until what Jerome Powell said in the press conference. But again, today, quite a bit more uncertainty. All right, let's take a quick look at some setups from earlier today, and then we'll pause in about 10 minutes for the live market. So moving on from positional analysis now. So my thesis for the day, first of all, looking for lower volatility in the morning and then high volatility after the announcement in the afternoon. Direction depends entirely on how the market interprets what the announcement and what Jerome Powell has to say. And there were, again, just very few shifts in levels, minor shifts in levels for the S&P 500 and Nasdaq. All right, so again, let's move on to execution, move on to real-time data. I'm going to start with the S&P 500. As always, I'm going to take a look at what options traders have been doing today. And I'm going to start again with the S&P 500. This is the HIRO signal, HIRO, Hedging Impact Real-Time Options. This is available to Spotgamma subscribers. What this chart is showing is options trades and market maker hedging activity in real time for a combined signal of SPX, SPY, XSP, and ES futures. This is the combined signal, again, the index signal. There's another signal that we can take a look at for the S&P 500. That is the equity signal. So typically, the equity signal is a little bit more smooth, a little bit more in line with price, but I think especially in the morning, the index signal can tend to provide more of a leading indication of price. All right, so what this chart is showing is options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. I'm going to go back to the S&P 500. There are two lines in this chart. The white line is price for SPX. The HIRO signal is in purple. A falling HIRO signal indicates traders are taking negative delta positions. They're buying puts and or selling calls. A rising HIRO signal indicates they are taking positive delta positions. They are buying calls and or selling puts. All right, let's take a look at what I want to take a look at in the morning was this short setup in the morning. So I'm going to stick with the total signal here for the S&P 500. And note it starts moving lower right around 940, 945, continues to move lower. All right, so that's the total signal for the S&P 500. And the S&P 500 continue to chop, making slightly lower highs, kind of grinding lower up until about 1045. Let's take a look at what happened at 1045. It's a little bit more clear on the equity signal here. So up until about 1045, traders were buying puts. They were also buying calls. And then at 1045, they start selling calls and buying puts. So at that point, blue line, orange line moving in the same direction, coordinated move lower, and price moves lower, breaks down to right around 1045, breaks out of that consolidation. So let's go take a look at the S&P 500 ES in Bookmap. You zoom in a bit. So we'll take a look at the signals in Bookmap. Here's that slow grind lower. ES making slightly lower highs. Then 1045. That's when the blue line and the orange line on the S&P equity signal started to move lower. Price dropped down to the 5620 level. That was the primary target. And note on the way down, You can see the volume dots showing aggressive sellers. Magenta dots indicate more sellers than buyers. Green volume dots indicate more buyers than sellers. You can see a lot of aggressive sellers and higher volume as ES makes lower highs, lower lows. Cumulative volume delta dropping. Also sell stop orders shown by the yellow line help to fuel the move lower. And in the subchart, the light blue line is showing that large traders were fading this move. They were buying weakness with iceberg orders, very typical behavior. They use iceberg orders to hide their size. And at 56.20, you can see the shift in the volume dots. Sellers are exhausted. Aggressive buyers start to come in, and price reverses higher. Let's see what options traders are doing. Go back to Hero. And you can see right around noon, 12 p.m. Eastern Time, call sellers take their foot off the gas. They start buying calls. They stop buying puts. And really the put line flattens out at that point. Call buyers helping to drive price higher. All right, so pretty clear signals for that V-bottom reversal in both Bookmap and in Hero here. Again, coordinated move lower. Blue line, orange line. Call sellers, take the foot off the gas, start buying calls. Put buyers take the foot off the gas. And aggressive buyers start to come in. And again, remember, large traders were fading this move. They were buying weakness as price was dropping down to 56.20. All right, let's move on to Nasdaq. And for Nasdaq, there are two signals that we can take a look at. This is the index signal showing options trades, market maker hedging activity for a combined signal of NDX and QQQ. Price is shown in terms of NDX. Then there's the Mag 7 signal, which is equivalent to the equity signal, and the SB equity signal, which is actually often the Mag 7 plus 493. So this looks very similar to the equity signal, S&P equity signal. This is showing options trades and market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. Go back to full screen. We'll take a quick look at this, and then we'll get to the live market. So you can see this very similar setup to equities. 1045, coordinated move lower, puts and calls. Call sellers, take the foot off the gas, start buying calls. Put line flattens out, price reverses higher. Let's go back to Bookmap. Go to Nasdaq. Here's that 1045 reversal. You can see the shift in green volume dots to magenta volume dots. Price breaks lower at that combo 3 level that had acted as resistance before. Then breaks below this NQ 19,450 absolute gamma strike call wall. Price makes a lower around noon. Large traders also fading that move, buying with iceberg orders. Aggressive buyers start to come in. Again, you can see the shift in volume dots. All right, time is approaching. I'm going to go ahead and get ready. Zoom in just a bit. And let's go back to Hero. I'm going to go to the total signal, and I'm going to start with the index signal for the SP 500, and we'll shift around. All right, I've got about 45 seconds. Future millionaire, welcome, glad you're here. Ask the Spotgamma levels on the chart as a free indicator, or you manually put the levels. So Spotgamma is not free, and I do put the levels on my chart manually on the Bookmap chart. All right, let's go back to Bookmap. All right, about 10 seconds. Everybody, helmets on. All right, know that I am looking at a little bit of a delay in CNBC. All right, so announcement. Looks like the initial reaction, the market is happy with the decision. All right, so it is a 50 basis point cut. So it looks like the majority was correct in the CME Fed Watch tool. All right, so 50 basis point cut. Market likes it. Zoom in a bit. This is the upper daily expected move for ES. So initial reaction very bullish. This is a fairly typical price chart for an FOMC day. The earlier part of the chart pretty much looks flat compared to the reaction after the FOMC. Let's see what options traders are doing. Go back to Hero. Index signal, initial reaction bullish. Traders taking positive delta positions. Let's take a look at the equity signal. And what I'm going to do, I'm going to open this. Instead of jumping back and forth and zooming, let me try and open this in another. Well, I'll just, here we go. All right, so we're on the equity signal here. So I can zoom in. Initial jump up, and then the equity signal continues to move higher. Let's go back to the index signal. I'm just going to go to this screen, this tab. Zoom in. So there's the reaction. Oops. Go back to this one, sorry. Go back to the index signal. All right, index signal for the S&P 500. Usually with after the FOMC, there are several legs up and down before the final move. S&P 500 right now looks like it is starting to move higher again. S&P equities. Sorry, I'm so used to jumping back and forth. Sorry about that. All right, let's go to equities over here. That continues to move higher. Index signal moving lower. Seems like it is more closely correlated with price. Let's go back to Bookmap. So it looks like support at the 5660 level. Yesterday, that was the point for a short that I posted in Discord and X yesterday. Fed says risks to both sides of the mandate are in balance. Committee has gained greater confidence, inflation moving to 2% target. Let's go back to Hero. That is the index signal. Now to the equity signal, looking stronger. Traders continue to take positive delta options positions. Now the index signal starting to jump higher and expecting the S&P 500 to move higher. Let's see what's up above. Up above, if price continues to move higher, this is the upper daily expected move for ES. Above that, the 5,700 level. And then the SPY 570 call wall. And then up above that is the SPX 5750 call wall. All right, let's go back now. It looks like some weakness. Let's go back and check and see what options traders are doing. Now taking negative delta positions in the index signal. And for the equity signal, looks like it is flattening out. Note this flow alert here. That could be a signal of mean reversion or a reversal. All right, so now it looks like things are turning around. Well, maybe not. Maybe the 5650 level acting as support. Or maybe that's just a pullback. Let's see what options traders are doing. All right, equity signal starting to move lower. Index signal much lower. Let's take a look at VIX. Zoom in on today. And as expected, as the news came out, sharp drop lower in VIX, down to around 17. Now VIX starting to move higher. Let's go back to Hero, separate out puts and calls. Get more clarification about what traders are doing. So initially it looked like traders were buying calls. This is the equity signal. Quickly took their foot off the gas. Now when we look at the individual signals, both pretty flat. So call buyers took their foot off the gas. I'm going to shift back to the total signal. Let's go to the index signal. Same thing, initially call buyers took their foot off the gas. Go back to the total signal. Right now continues to move lower. Interesting. Back check Hero. I'm going to go back to the entire day for the index signal here. And the Hero signal is back down to the low of the day. Distinctly negative. Now moving down below low of the day, minus 1.5 billion. So sharp drop lower in the index signal, Hero signal for the day. Definitely in negative territory. And it's actually been negative all day. Go back to the equity signal. That is still positive. But this full alert was a good mean reversion signal right there. Signaling the peak in the Hero signal. As price was already moving lower. And continue lower from that point. Let's check Nasdaq. Go to NQ Futures and Bookmap. So far, Nasdaq still has not quite done a round trip. Now starting to move higher again. So the launching point was right around the QQQ 473 volatility trigger. Found support around that level. Now support around the NDX 19,450 absolute gamma strike call wall. And let's go to Hero for Nasdaq. Open up one more Hero chart here. And let's take a quick look at the index signal. Index signal has been strong since around 11:30, 11:15. Now maybe reversing higher. Again, support at the NDX 19,450 level. That's shown right here, this light blue line. Shift to the Mag 7 signal, and it is stronger. S&P 500 index signal. Looks like the S&P 500 did a round trip. That's right at the last closing. Now moving higher again. S&P equities starting to move higher again. Let's go back to Bookmap. So key support for Nasdaq was that 19,450 level. And then right at the announcement, the QQQ 473 volatility trigger. Go back to ES. So again, ES did a round trip that was right around ES 5700. Now moving higher again. Let's check VIX. VIX should be moving lower, and it is. Let's go to our SPX 1 minute chart. So SPX trading above now that 5660 level. All right, Hector says, I'll rewatch carefully on weekend, but is it possible to load before movement with stop loss, or not recommended, better wait for correction if possible, would be vertical single good strategy. Not quite sure I understand all that question. So what you're asking seems to be two different things. One would be, I guess, the overall basis of what you're asking is an approach to trading this. The first, with a stop loss, I assume you mean you're asking that about futures. And what I've seen some traders do is you can put simultaneous orders in Bookmap, somewhere wherever you want. A buy stop order above a level and a sell stop order below that level. If you did that, you most likely would have, this order would have been entered, then stopped out, depending on where your stop is. Then this order filled and continued on. So buy stop order at this level, sell stop order below that level. That's one approach. I think a better approach would have been to wait a few minutes, watch the hero signal, watch order flow, short there, and as things are slowing it down a little bit, long there. So you could buy a call spread. Here you could sell a call spread, buy a call spread, buy a put. So any number of ways to trade that. I think either trading shares of stock or futures in this fast-moving market is probably the easiest approach. So if you're trading the SP 500, either trading ES, full E-minis, or micro futures, or shares of SPY stock. And again, this fast-moving market, probably the best approach. Trading small with wide stops. I like to trade spreads in a positive gamma environment where price is moving up and down, mean reversion trades, slower moving. That's when I like to trade spreads. All right, let's go back. Let's take a quick look and see what some single stocks are doing. Apple up and down today. Take a look at Amazon. Let's take a quick look at the hero charts for these stocks. I'm going to open one more hero chart. Then we'll get back to the indexes. Let's just take a quick look. At some stocks. Remember that 1045 short setup that I talked about earlier, and that was evident in a lot of stocks. Here in Apple, 1045, hero signal moves lower. Earlier in the day, a long was the setup, the way to go, where traders are buying calls and selling puts. Then there's that coordinated move lower right at 1045. But that was just a deeper pullback to go long. Amazon, also long in the morning, call buyers driving price higher. Take the foot off the gas at 1045. Price starts to move lower. Meta. Yeah, you can't. Let me zoom in on the morning. So here's the call peak. Call peak set up short, right at 10:45 again. Big move up in calls, reverses lower, meta reverses lower. Now they are aggressively buying calls and selling puts in meta. Let's check Microsoft. Weak this morning. Traders were selling calls this morning. Microsoft dropped lower. Let's go back to Bookmap. There's Meta. Call peak in the morning, 10:45. Aggressive sellers start to come in, shown by the magenta volume dots. Price versus lower, recovers, and now sharply higher after the FOMC. Finally, let's take a look at NVIDIA. NVIDIA moving higher. Let's see what options traders are doing. Call buyers coming in. All right, let's go back to the Mag 7 signal. Call buyers and put sellers. All right, so traders like what they heard in the Mag 7 stocks, buying calls and selling puts. There's the S&P equity signal. It looks like the S&P 500 has now found a all right, so the S&P 500 now is kind of flattening out, now waiting on the press conference. Go to the equity signal. That continues to rise again. That is often the Mag 7 plus 493. Mag 7 signal continues to move higher. Nasdaq closer to the, well, that's NVIDIA. Mag 7. All right, let's go back, wrap up our views with Bookmap. Go back to S&P 500. Hector says it was a range of 70-point movement with a 50 basis point cut. The basis point range could give an estimation of price range. I don't think so. I don't think there's any correlation at all. Sorry about that. I think it's just the order flow and hedging flow driving price. All right, so now it looks like the S&P 500 is consolidating. Right around the 5660 level. Again, that was resistance yesterday. All right, W. Black wants to take a look at Tesla. Sure, we can take a look at Tesla. Chop in the morning, then around noon. Tesla moving pretty sharply higher. Let's see what options traders are doing in Tesla. So they started buying calls in Tesla right around noon. Whoops. Price be, sorry about that. Keep getting the wrong tool. Started buying calls. Price move higher. Note 230 is the call wall key gamma strike. So there was a call wall breach in Tesla. Looked like that level did act as resistance, then support, and the support after the announcement. 230 key level. There's that 230 level. Final support. Now Tesla moving higher as traders continue to buy calls. All right, again, let's go back to the indexes. Now the S&P 500 chopping in a range. Waiting on the press conference. Check on Nasdaq. Also in a range between 476 and 477. Waiting on the press conference. And W Black, you're welcome. And Jettins asks, what is the name of the chart at the bottom with the 3 lines? So I assume you're asking about this chart. This is Bookmap. I'm showing the NQ futures in Bookmap. The 3 lines in the subchart are cumulative volume delta, iceberg orders, that is actually an add-on in the MBO bundle, and then stop orders with the yellow line stop orders, blue line iceberg orders, again part of the MBO bundle, and the magenta line is the cumulative volume delta, and this is the Bookmap chart. All right, everyone, the press conference is beginning. I'm going to wrap it up, let you get to your trading. I want to thank you very much for watching. Thanks for your questions and comments. Remember, big options expiration on Friday, and we will focus on that on Friday. And also remember, VIX expiration today could be start of a correction like it was in July, but the FOMC, I think, certainly complicates that. All right, everyone, have a great afternoon. I will see you Friday, and we'll talk about options expiration. Thanks again. Bye.